Good evening. Ira Epstein with your SPDR-ETF stock market wrap-up. And this wrap-up is for Thursday, and we're sitting here now at August 29th. Oh, the summer's coming to an end. I hate it. 2024. Wow. You know, it's interesting. NVIDIA broke away from what the stock indices were doing. As you can see, they were basically all higher today with the exception of QQQ. And QQQ, I was questioning myself yesterday because I told clients to come out yesterday. And when it got up there, I'm going, boy, do I look stupid. And, you don't like when that happens, but it didn't. It did just fine. Gold stayed up at the end of the day. I still like Amazon. I'm just looking for spots for entry. Microsoft is another one that I've been looking at. Dell. I looked at the earnings of Dell finally today, and they look pretty good. Not stellar, but good. They're picking up business, and that's important. As we take a look at the motor companies, okay, little games going on here, and we're seeing different things taking place around the industry. A lot of cost cutting is one of the things that I see going on. Uranium has come up, but it's hitting a roadblock here at the upper Bollinger Band. Uber's a play that I'll be looking at again as we get into the fall months. I want to take a harder look at that. NVIDIA, though, down $8 today. Tesla not doing very much. Did you read about Tesla? Bank accounts in Brazil were frozen because it's gotten into a fight with the government over censorship as to what's on X, and you can read about it in the papers, but you don't want to get into that kind of position unless you're going to pull out. And why pull out? But I don't run it. Okay, so here's NVIDIA, but before we get there, maybe we do something. Let's take a look at what you're going to get tomorrow. You're going to get personal income spending and the PCE price index data for July. Now, it's July, not August data. Income's expected up 0.2 and spending up 0.5. You're going to get the Chicago PMI for August, and that's expected a little improvement, up 0.3 versus 45.3. And University of Michigan, the final consumer sentiment number. Now, at the end of this video, I'm going to want to talk to you about something that I've come up with. And it's a 3-month sale that we're going to have for what we're doing. And I think you'll find it exceptionally interesting. We're slashing the price of my different subscriptions for new and returning people, just new and returning subscribers. A lot of people take off for the summer as they come up, so that you can see right on the bottoms your disclaimer through that. We'll talk about this in a minute and what you get for all that, but I think you'll find it interesting. All right, so my attitude now on the video has changed. It's no longer the stock of the stock market. It is the stock of semiconductors, but I'm not going to treat it the same way going forward. The fact that it's down and the other markets can improve from it tells me a story. The second part of the story, and there's two parts to it, is number one, you have a mature market. Number two, what you expect in earnings to do what it did when this company was much younger in the past year and a half. That's the word, much younger, and able to gallop its earnings is not going to be what the company does going forward. Its profit margins will fall. Any way you want to cut it, you can argue with me, they will fall. Blackwell will be a success. It's not being shipped right now. Yesterday's code words, and I said it here, when you say you're shipping samples, it's a code word, the product isn't ready. Okay, it's sort of like when Microsoft says, do you want to be a beta user for this and that? I've done it in the past, and I still do it on different projects for people because I like to do that and see what they're going to have. Number two, offer input. But that is why you've been coming back down. So does this belong at a 35 PE? Does it belong at a 40 PE? I don't think it's any longer the numbers that make no sense. So I think that's how the market's going to be judged. Notice that it fell back to the 18-day average of closes where it's holding. It is now not trending. You have a higher high, lower low. Oh, by the way, what markets do you want me to cover instead of NVIDIA starting tomorrow? If you write me, do it as you're watching here on YouTube. Do it in the comment section. If I choose you, I will give you a free subscription for a month to one of my products, all right? So, where you go. All right, you could even get a course. You know, I'll choose what I want to give you. After I'll have my people talk to you and you will get something. But I have to have it obviously tonight or in the morning, because when I shoot tomorrow, I want to have what I'm going to choose from. Higher high, lower low, not much there. And notice the market, once it hit the Bollinger Band here, and I did point that out, it just started drifting sideways. So do I see a lot of downside? Of course not. But I also don't see the market easily getting back up into the 140 area. It's going to have to earn that now, and that it's not in that position. Plus, momentum has been lost, which means all that bullish catalyst that you had is gone. That doesn't mean the market has to fall apart. But generally, when this happens, you go from embedded to this. This is oversold. Takes a little while to get out of oversold or re-embed. Could it re-embed right away? Well, if the market exploded in price tomorrow, it could, but it would need an explosion to new all-time highs. In Rivian, the question is, now the battleground is the 200-day average to the 18-day average. The trend is up. I think the pros are nibbling at 1376, and I don't think they'll give it much room. I think if it gets under 1359, they'll probably bail and say, maybe I'll want to probe down here where I've said before in the 1265, 1250 area. We'll see. Am I trying to be stingy and not reaching for that market? Absolutely. CrowdStrike, I did see the CEO today, and he did great on Cramer today. What he got himself into trouble yesterday, and I made mention, I saw what he was doing as he came out with the earnings and then the call and the forward guidance, and he was too defensive. Today he was not. It was perfect. Today somebody said to him, yeah, you go in, we made a mistake, we're working with our customers to correct it, we'll make it right, we've made provisions to make it right. Code word, they're going to cut prices, they're going to give something free, we want to keep our customers, we goofed up. It's the end of it. Every firm has a goof, every CEO has a goof. It's the way life is. You have goofs and I have goofs. And I think now, they've straightened the ship. That doesn't mean the chart action's good. I don't see it as good here, but I'm certainly not thinking you're going back down here. So the question is how to play it as we go forward a bit. In uranium, excuse me, I mentioned it had trouble at the upper band. Now, the major support has got to hold here in the 25 to 25.40 level. Close under 25, you might want to be going back down to those lows. I happen to think this market's trying to bottom out. I think this was too much for it, and it's got to, if you will, digest that gain and maybe some sideways action. In Dell, we had a market that failed on the close, but it has an embedded reading. If you can clear today's high, you open the door for 121.76. If you take out the lows of Wednesday, then I'm looking back for the 104.85 area. Notice the battleground's the 200-day average. But this runs the chart, not the price action here. This, until the embedded reading is lost by closing under 79, I'm looking for buying opportunities, nothing else. In Linn, looks to me like a market that wants to correct a bit. It could be going back here. But tomorrow's an important day. Let's face it. Linn, Toll Brothers, anything to do with interest rates, what do you think is going to happen? The market is going to look tomorrow at one of the factors to say a quarter, half point. What's the Fed going to do when it sees the PCE indices? And of course, next Friday, the jobs report's the big one. But you're not at next Friday. So I'd like to see it slip back and offer us a better entry. Same in the home builders. Now you're in downtrend in the swing line, but you have momentum up, but you're overbought. So in both markets, they're saying very realistically, not the time to be long. Time to get out of longs. Financial services, I'm really surprised that they've held on without any form of a correction. Every day is a higher day. I wouldn't go chasing that. If you're not in it, don't try to get in it. I'd watch out in the industrial sector, 131.67. If it can reach the upper Bollinger Band, should be a lot of resistance. Again, you have the embedded reading. Buying it on breaks is one thing. I wouldn't be chasing that market either. The energy sector, higher lows, higher highs. So it went back to being bullish with today's action. A lot of resistance, 91.75 to 89. Supports 89.59. You don't want to take out 89.37. If you do, you break this whole pattern and you open the door to come back down into this area, the 87.30 area. In the gold market, I'm still fully in the bull camp. It's embedded. Higher highs, higher lows, could still be headed to the 237 before all is said and done. And silver's not as strong as gold right now. It's fighting its battle to stay bullish at the 100-day average, and it's in overbought territory, not liking it like I do in the gold. In the copper market, I'd like to see more of a correction. So while the trend is up, you're overbought. I don't think I'd have you reaching for that. And you'll notice that TLT and BND have slipped down into the 18-day average of closes, not ready to do much of anything. As you step to the dollar, I've been looking for a bounce in the dollar. I've mentioned it a couple of times this week, and now you're getting it. I think it'll fail at 28.31, but it's time to no longer be short. You've broke this pattern, and that's what I was looking to happen, and you lost a bearish embedded reading. You flip-flop that on the FXE, and it could go down to the 102 level. So I got lucky calling those correct for traders. So let me just remind you what I'm going to be doing for you. What we're going to do is we've never done this, so this is brand new. 3 months, $180 service that's what I normally get, $99 for 3 months. Now, that is for my futures, twice daily updates, Monday through Thursday, Friday a morning update, Sunday night an update, and special intraday buy here, sell there updates from me on the futures markets. Next, the combo. The combo is the combination of the futures video in the morning for subscribers, put out at 6 a.m., and the ETF stock video put out at 9 a.m. That's the combination. 3 months of that for $49. Instead of $45 for 3 months of just futures, $29, and $32 for just the ETF spider for 3 months. Great deals. How do you take advantage? Go to IraEpstein.com. Look in the top left. You'll see a green bar. It says 3 month sale, or you can move your cursor up here, and we'll have the icon for you to click on there. Take advantage of it. This is going to wind down September 8th. It'll be on you before you know what's going on. And if you're on my mailing list, I will send an email tomorrow about this. Have a great evening. I'll see you in the morning.